Greetings everybody on board. We are here again, back doing this online incubation program started by Aamnaa Bharat Learning platform, doing amazing work. And honestly, to start with, as we all know, that we're going to talk about entrepreneurship, yes, but the aspect of finance and budgeting is what we're going to really cover today. So they say that entrepreneurship really can be very lonely and a tough job, isn't it? And they also say that, it gives you that head of practical grind that makes you stronger and better and helps you empower other people on the journey. So I would like to introduce our guest speaker today, Akshaya. She is the founder of Impact. And Akshaya, I'm welcoming you here formally now and sharing your profile. So Akshaya Narasimhan is a budding social entrepreneur equipped with IT, audit, and professional skills to use the skills to make positive returns to the society. Okay. She is also the founder and CEO of Impulsive Training Center and Impact, Impulsive Analytics and Creative Technologies. Now, if I continue, your accolades are much more return, and I'm going to put it in sweet and short words that working on developing inclusive workshop models, her organization Impulsive, by empowering the deprived section of the society, which is amazing, the Mission Shakti again. Congratulations, Akshaya. She has trained over 40 plus industry professionals, professors, PhD students, and on I can go. She is still continuing developing inclusive workspace and organizational model with her ventures in India and across. She has employed over 25 neurodiverse professionals, that's nice, who work on data entry, designing, and other corporate projects. So, Akshaya, we welcome you on board, and I would urge you to take this session forward with the joiners, the learners who are with us on board, and take us through the grind, take us through the run, and share your sweet words.
Thank you so much, ma'am, for such an amazing welcome. And good evening, good afternoon to everyone present here. I firstly thank Pradeep sir and Aamnaa Bharat for giving me this opportunity to share my thoughts on today's topic, which is finance and budgeting, and how finance and budget applies for startup. I think once we establish into a corporate sector, let's say we are 10 years in the industry, we sort of have the experience and knowledge of what are the number crunching that has to go behind any company that ensures sustainability and growth. Question comes, why such knowledge is required? It's a mandate when you're going to have a startup. And trust me, I've been through that journey and I'm still onto it at the initial stages of in my second startup, where this budgeting, costing is playing a very trivial matter. So without much ado, let me get into our today's topic. Please let me know once the screen is visible.
Yeah, we can see.
Okay, thank you, sir. So let me start with what is budgeting and why it is very important to prepare a budget in any corporate sector, especially for startup. It's quite natural that we come across this thought process that I'm the only person handling the company, especially for a sole proprietorship or a one-person company startups. It's quite natural for us to think that, okay, it's all in my head. Why do I need to prepare a budget? I know what I'm spending. I know what I'm, getting the revenue on. Why do I need to prepare a budget? Everything is in my head. When it comes to a partnership firm or a very new private limited company that's established, then by audit mandate, you would be preparing your accounts and costing side, and then budget becomes a mandate eventually. But still question comes, why budgeting at the initial stage when we as one or two proprietors can remember everything what we are spending and keep track about it easily? Budgeting is very simple. Anything quantitative within the business comes into the picture. So when I say quantitative, it involves your outflows and inflows. Is it actually happening? The question is, in budget, do we actually record the inflows and outflows, or is it the projections? So when you actually record what the business is going through, that comes under your balance sheet and P&L statements, your financial statements, when you're doing it on a cash or accrual basis. But when you add a projection to it, that is, today I know that I'm going to spend 10 rupees out of the 100 rupees I've earned. But tomorrow, how much am I going to spend? Day after tomorrow, how much am I going to spend? Eventually, the question comes, in 1 year, how much am I going to spend and how much am I going to save? Or will I land up spending more than my earnings? Then what should I do to spend more when my earnings are limited? All these, when it's quantified, when these questions are quantified into numbers, that's what you call as budget. What brings down your cash flows? Precisely what are your cash outflows? Whenever you're going to spend on something, and whenever you're going to take any liability, that would probably be in your left side of the balance sheet. Or if you're following a vertical balance sheet in the corporate structure, it comes right on the top, equities and liabilities, which marks the cash outflow. The question comes, when I take a loan, am I not getting cash? Why do you feel that it's bringing down my budget? So whenever you're going to take any loan, every month you pay something known as interest. Whenever you're going to go for equity share, you're going to give it to the shareholders, you have to pay them dividend. And when you're going to launch debt, debentures, then you have to again pay them interest. Yes, in the principal amount, you get your cash from all those who are investing in your business. But every month, every year, there is a cash outflow regular. And eventually, after the term period, the whole premium is to be paid back. And that is the reason it comes in as a liability. You are obligated as a company, as a proprietor, you become obligated to pay them back, the investors back. And then what can increase, what can improve your cash inflow in the long run? Your sales, because sales is something where you can claim ownership on. It is your product, your service. Now, this entire presentation is going to be irrespective of whether you, as women entrepreneurs, you are onto product or service side. But sales revenue generation, it is your command on what you're going to get. Whether you're going to get it today or if you've done something in credit terms, you will eventually receive it. That marks the cash inflow. And apart from that, any other investments you have done, that's also a recurring cash inflow. So it's very essential that we strike a balance in this. Suppose we have more of cash outflow, then it's very evident that you would lead into a loss, break even and then a loss. And when you're having a lot of cash inflow, then it goes to a profit. When there's a cash outflow, it gets into a loss. Okay, we saw very briefly what is budgeting, just a basic concept of what is budgeting. What does it help in? These are just some of the pointers which we could gather on. Mainly what it does in your company is that as a manager or as the owner of the company, you will be able to assess the financial health. Balance sheet and P&L, it shows today's assets and liabilities. It shows the year's profit. But budget helps you to forecast. The projections help you to forecast your company's growth in the next 1 year, in the next 5 years, in the next month, and also in perpetuity. So how is company's health today and how is it going to be in the future? Do we have to, come out with more products? Do we have to get into mergers? Do we have to get into acquisitions? Major strategic decisions like these are taken once the budgeting is set in par. And also it helps you to understand, suppose if you're going to, of course, we'll be coming to different types of budget, but suppose you're going to prepare something known as department-wise budget. That is every department, what are their cash inflows and cash outflows? That will help you to understand how is that department functioning. So you can start with holistic as a company and get into the granular departments of the organization. So not just company's future, but even department wise, the future. Do you have to get into more recruits? Do we have to cut short? What are the costs that we can cut? Everything is being understood with the help of right budget procedure in place. So before moving on, I just want to make a quick check with all people who have come here. Is the basic of what is budget clear? Because I'm taking it with understanding that all of you are new to accounting and finance concepts. So if there's any terminology which you would want me to explain again, please let me know.
I request all those who are having any of the queries in regard to this particular slide or up to now, if at all any such questions are there in your mind or you would like to ask on those, please unmute yourself or write it on the chat box.
I think.
Yeah,
let me just, Pradeep ji, ask a question on behalf of many who would possibly watch this later as well as the session.
Yes,
and I feel with the little experience that we all have, considering that, I'd like to understand for the audience around who will watch this later, or even people who have joined us now. Tell me the difference. Let people understand what is really a business budget in very lay understanding, and how this financial budgeting sort of helps in the growth prospect, the benefits, really components and types. Of course, you'll be discussing as you said earlier.
Yes.
Yeah.
So you would, if I'm right in understanding, you want me to explain what is budget in a corporate budget in a layman term.
You have basically stated that, I'll be honest, but I'm just asking the financial budgeting per se in an enterprise. When you talk about, there's a master budgeting. If we go through the terminology and everything, considering the background that I come from, I just want the audience to understand that financial budgeting for an enterprise and how does it pave way going forward in lay understanding.
Okay, perfect. So let me, not get into a very technical explanation of what is budget, and then just say that what you earn, all of us are individuals in the end of the day, and somewhere we have worked in the corporate sector, assuming we have got salary. We have been paid at one point of time as salary or a stipend when we have been interns. So whatever you get, your salary, your stipend is going to be a layman's, a common man's income. And out of that, when you're going to pay your house rent, electricity, food, then anything which is essential for your day-to-day living, that's going to come under your expense. It's basically leading to your cash outflow. Or in other terms, it is coming, you're using your salary and stipend to pay that. Once you make note of this, say in a book, many of us have had that practice actually. We take a book and we write down, okay, this month I've received this much income, and these are the expenses that I have incurred, and this much I've saved. This is a common man's budget. The same thing when we put it for the company, it becomes a corporate budget. And everything, after this, every concept, I would be rooting it back to the individual's example on how very similar it is. What we do for ourselves is the same thing that we do for the whole company. So now let's come to an individual. Why do I have to prepare a budget for myself? Again, the question, same thing. I know what I'm spending. I know how much I'm earning. Still, why do I have to prepare a budget? Now, okay, if everything is in my head, I know what I'm spending today. I'm just ensuring my today's livelihood. Today I have 100 rupees. Okay, I spent 10 rupees. Okay, I save 90 rupees. For tomorrow, I'm carrying forward 90 rupees. Then tomorrow again, I will say, okay, fine, this much I spent, this much I saved. But what happens here is eventually I lose track of how much did I spend in the last 15 days, last 28 days. I lose track of that. I will be able to remember only today's, and today's. That's it. And then what happens is I'll not be able to gauge moving forward. Do I have enough money for tomorrow? What if, I keep spending 10 rupees every day, but I'm supposed to pay rent in the month end as an individual? Shouldn't I be anticipating that and, keep some amount for it separately on the day one I receive my salary? That is called a budget. In fact, in a corporate term, you call it as contingency provisions, which is nothing but you are setting aside amount for each of your anticipated expenses, which is like rent, because you know what it is, you know how much you're paying rent. Electricity, to an extent, you can, estimate and anticipate, okay, this month, this much is happening. And then after allocating all the expenses, you add little more of contingency that, okay, God forbid, some other, new expense comes in, I still have my money. And then you keep your savings. From there, you will look forward at your investment. This is what an individual does. And the same thing, ditto, we do it for the company as well. Aamnaa ma'am, was it clear, or you want me to go in depth further?
Akshaya, it was very much clear to me, but I just wanted the audience to really understand that, this was the yardstick really. Because whoever connects when should know. This is an incubation program, we understand, but when it goes to YouTube, a lot of people do connect, do send messages. So it becomes important that they know what we're really, talking about. So
Absolutely.
Yes. So you can carry on.
Thank you. Okay, so where do we start with the budget? Very simple. Start with how much do you have in hand? Basically, the cash in hand. How much do you have with you? From there, you will make a list of how much you need to spend. And that determines how much money you need to meet your goals. As I told you, as an individual, I have my salary, I spend my day-to-days, monthly expenses. And what are my goals? It can be quite possible that 10% of what I earn, I want to save it. I want to invest it. 10% of what I have, I want to donate it this month. So your budget helps you to meet your goals. Same way, if you prepare for the company, for the whole organization, then you start with how much the company has cash in hand. What are the anticipated expenses? Based on either, if it's very fresh, then you will be anticipating it raw. But suppose if there has been a track record of expenses, let's say you're in your first year of operations, you have a successful 9-10 months, then you know how much you've spent in the last 9-10 months and how much of it will carry forward, and then help you to determine what your business goals are. Okay, why are we preparing this budget? Yes, we do know that for self-evaluation purpose, we are preparing. As a company head, as top management, we are preparing to understand the company's health. Agreed. To understand the department health, that's also agreed. But who are the external stakeholders? Those who are looking forward to invest in a company. For example, very simple. Suppose I have 100 rupees. I'm coming back to my example, 100 rupees. I have spent 70 rupees completely. The 70 rupees is gone. Now, my landlord is coming to me and he's asking for rent, which is 50 rupees, let's say, assuming. How much do I have? I have only 30. I still need 20 more. Now, let's say, since I know Pradeep sir, I might go to him and I'll ask him, sir, can you please lend me 20 rupees? My landlord has come, he's asking for rent, so I need to pay. Now, what will Pradeep sir first think? What will he do? He will not blindly give me 20 rupees unless and until he's known me for generations and we've been good friends, which, as family friends, which we are, but assuming nothing is there. I just know him, I know he helps, so I went and I asked for 20 rupees loan. He will first find out what has been my salary track record. Have I always been coming and asking for extra amount? Have I been able to repay? He will understand all of that. Now that information, he can easily get it if I had a budget, cash flow statement and my personal financial statements in place. Otherwise, he has to go around asking people, okay, has she paid you back? Has she ever taken loan from you? That's a big headache. And suppose if I am able to provide Pradeep sir with my budget, my costing, my financial statements, then he will have complete confidence. Oh, she's very particular about her costing. She's very particular about her accounting. So somehow she will give me the money back. That is the first place where the external stakeholder, the external party places trust on your financial position. It is the way you win the trust of the external stakeholders. A proper budget is required with very realistic values, and not, we should not be try avoiding window dressing, making it look fancy, making it look more profitable. What it is at the entrepreneurship stage. So the financiers would definitely be interested. Whomever you're going to go for loan, venture capitalist, anyone who's going to invest in your company, they will ask for your budget. Employees, and sometimes they will also look into your budget if they are given the access to it, mainly because to understand, is the company going to run, or should I look at a change of job? Each person has their own interest, when it comes to the company. So everyone who is directly or indirectly involved with the company will definitely ask for your budget when you are looking forward to engage with them. Let's come to the numeric terms. What is the budget equation? It's very simple. You have your sales, that is your revenue. Reduce the cost, and I'm being optimistic in my equation here, so I've written as profit. But trust me, when it comes to a startup stage, in initial years, it's very difficult that we are able to show good profitable numbers. In fact, history goes with this saying that anticipate loss for 5 years. If you've made profit, some entrepreneurs, they say that you're going in the wrong direction. Because when you're going to do any entrepreneurship journey, any entrepreneur comes out with the thought that their solution is the first in the market. Whatever they are doing, their product or service is the first ever in the market. And when you're hitting at such a breakthrough in the industry, it's very obvious that you would get into a loss-making company. But shouldn't be disheartening. That's another thing. But that's how it goes. So you start with your sales. When you're going to sell your product, when you're going to sell your service, how much of revenue are you going to get? For example, let's say this finance course I'm teaching, and let's say I'm charging for around 1,000 rupees per month, for example. On record, any of the trainings that we offer is completely free because we are looking to impart education. But this is just for an example that assuming per day I'm charging 1,000 rupees for one concept being taught. What is going to be my cost? Online platform. So my costs would be, Zoom as the training platform, because I have to get into a paid version, and then a nice good computer, MS Office, subscriptions, everything comes into this. And let's say suppose I'm going to use other teaching modes and assistive technologies, then those software subscriptions will also play a role. Pen, paper, notebook, board, if it's going to be required, then those will also come into my cost. Whatever is my revenue minus the cost, it can give me a profit or a loss. Let's first start with understanding what is revenue. When you have decided what is going to be your domain, your USP, your product or service, which is going to be the unique in the market, you need to very carefully determine the pricing of it. I'm not getting into, suppose you're getting into a free platform, free service rendition, that is a complete different concept altogether. But suppose if you're getting into a proper profitable business model, then you need to have your pricing parameters correctly. Any product or service, even if it is teaching, get into the beta testing phase, because you will know how well received it is in the market and what are the improvisations and enhancements that has to be done so that your product or service reaches in the market. Again, beta testing phase involves its own cost. Then you need to select an appropriate revenue model. What is the kind of sales you're going to do? Are you a completely website-based sales? That is, you're going to use only online platform? Are you directly dealing with customers in a physical platform and leading to a direct sale? Or you get into retailers. You are a wholesaler selling it to retailers and get into a indirect sale mechanism. This is just an overview of what involves in the revenue. I do not want to get into very, very technical, but as an entrepreneur, we need to understand these basic terminologies. On the day one, like how am I going to price the product? How well received is it going to be in the marketing? And what is the kind of revenue model that I need to understand? Now, the moment revenue comes in picture, directly or indirectly, even cost comes into the picture. The understanding of cost hidden behind each of these decisions also play a role. Let me come into it in the next slide. This is a small sample of how your revenue budget looks like, your income budget, where you're having your operating and non-operating income. Operating income is, somewhat like revenue, where it is directly from your service or product being sold. Now, accounting wise, the terms are going to be even different because the definition goes different. But just for a layman understanding, the first part, you will always write what is the direct sale revenue that has come to you by selling your product or service. And then you also add to it other incomes, which is going to be like interest. Let's say you, as a corporate sector, you have invested in another company's shares. You're going to get your interest. You have a huge office. You have sublet one of the room to another person. For example, I just came across, one of the training centers here. They have a huge office. And one room, it was never used often because they were using other, student-teacher rooms to impart education. There was one meeting room which was always idle. So what they decided to do, they decided to sublet to another person who is taking a part-time tuition for 2-3 hours. And at that time, they were not involved into any sort of teaching at that point of time. So they felt that they could generate revenue by subletting their office space for just that 2-3 hours per day. It became like a monthly rental income for them. So why does rental income come under? Now it's very important to understand. Suppose if you are an real estate company, rental income is your direct revenue. It's a revenue. It's an operating income because it comes from the operations of your activity. Your business activity is sale, purchase of land. But for a training center, rental income is a non-operating income. It is not the business activity. The training cost, the revenue from teaching is going to be the business activity, but not the rental income. It is not coming under the definition of business activity. Then any other gift donations. So now suppose if you're going to function as a charitable organization, then you will receive a lot of subscriptions, donations, membership, funds, all these come under your income. So when you have this budget, now when you have the actual figures, whether it was accrued or cash basis, it will look just like your P&L or a balance sheet statement. But when you have your actual figures, your budgeted figures, and then the difference, then it makes your wholesome budget. And when it comes to revenue budget, if your actual is more than your budgeted figures, that is, you have a positive difference, it is a growth for your company. It is good for your company. But when it is less, then it means that your anticipation has gone wrong somewhere. Why has the disparity come? Why have the actuals fallen short? For example, suppose if this month I'm supposed to receive a sale of 100 crores and I receive only 80 crores. I'm able to generate a sale of only 80 crores. Why has there been a 20 crore difference? Now, why is it essential to understand this? It is because same way like how I'm anticipating revenue, I will anticipate my cost as well. And I will look at some investment that is to be done with that 20 crores which I have lost. All that gets affected. It becomes like a dominoes effect. One place, the actual falls down. In the revenue side, it affects your cost, it affects your investment and any other strategic decisions that's going to take place. So that is why you need to understand actual, budget, and the positive and negative difference. Now let's come into the cost. When it comes to cost, you have fixed, variable, and semi-variable. What is a fixed expense? Every month, me as an individual, I am paying rent every month. Now, is my rent going to change? Is my landlord going to come and say, okay, this month you pay 20,000 rupees. Next month you pay 30,000 rupees. After that you pay 15,000 rupees. None of us get into this monthly, rental like in this manner. It's never going to change. It's going to be fixed month after month. Yes, maybe after a year 1% increase, based on the market value that is there, but predominantly it remains fixed. Once fixed, at least for that year, it is fixed, which is stated in your contract. Same way for every company, there are some costs which are fixed, means every year, year after year, month after month, it's going to be the same. That comes under fixed cost. And that's the easiest place to start with when you're going to start your costing record, because you know the amount. You needn't anticipate something, you needn't determine something and then put your numbers. You just know what it is, put it. Next comes variable cost. Now, variable cost is your majority of your variable cost comes directly to your production cost, because how much will you be spending this month on producing a particular product or service? That changes. The costing changes over there. It's not, you cannot determine it whole thing. This month you would feel that your demand would be for 10,000 products. You will produce for 10,000 products. Next month, you may find that it might fall short. So accordingly, you will produce. So there, the cost of production is going to change. Very simple. Let's come to an individual's example. I know I have to pay electricity every month, but can I tell the amount, exact amount? No, it depends on my consumption. So my consumption is subject to changes. For example, during summers, I'm going to have my air condition on. My electricity bill is going to shoot up. I can anticipate that it will shoot up, but I cannot tell the exact amount. So this is to be understood when it comes to what is fixed and what is variable. My rent is fixed, but my electricity, despite knowing that I will incur that month, I cannot tell the exact amount at all. So that's going to be my variable cost. Now you have something known as semi-variable cost. And I think this is pretty easy for us to understand, because in India, you have this some places you have this electricity and phone bill where you have to pay 1,000 rupees for certain amount of usage. After that, whatever you use, you have to pay extra amount. Suppose you use less, but still you have to pay 1,000 rupees. That kind of, basic amount is fixed. There is a floor cap, the basic amount is fixed. And after that, it becomes variable. So that comes under a semi-variable cost, where you know that you have to pay 1,000 come what may. Over and above that, it becomes variable. Same way in an organization, you can get into any deals, any, even it can happen for their electricity as well, that this much they have to pay come what may. Over and above that, if they purchase, that becomes semi-variable. So this is a typical expenditure budget. Income budget was very easy. We didn't have much to, see. But expense budget, you need to get into as depth as possible. Please note, suppose today you are just in the ideation stage. You are at the thought process that, okay, in 2-3 years, I want to have a startup. Please be very careful. There are something known as startup costs. That is registration of your business. Marketing cost, which is a huge detail. I'll come to it. You have your marketing cost, licenses and permit. Basic HR is required. Basic human resource management, like you need little staff to work with you, maybe on the admin side. Suppose if you're not financially strong, then someone to advise you on the finance side, your accountant, your CA, or whomever is required, basic within the company. You have to pay them salary or little bit of, as a stipend. And, other than that, suppose if you're getting into a physical establishment, then buying the office space, paying the first month rent, all that you will have your startup costs. Now I told about marketing. When it comes to marketing, please note it's not that at startup the marketing is less. Marketing is massive at the startup stage because you need to establish your brand name in the industry, for which you will be using physical marketing like flyers, brochures, announcement in the newspapers, etc. You will use digital marketing, digital promotions, and design of logo, launching of brands, all such things. When you're going to come out with marketing cost is going to be massive in the initial stages. And all this has to be anticipated for, because I'll come to something known as funding concept. It plays very important role for you determining the right amount of funds that you will be requiring. So startup cost estimation is the most important. How much of equipments will you need? Do you need computers? Do you need machinery? Or just an office space, desk furniture will do? Everything has to be determined. But this is a simple example of an expenditure budget for a startup that's established for 3 to 4 years at least. Then around 80% of these expenses you will be finding in your company. And this is mainly for a product-based budget. But majority you can have it for services as well. For example, business entity, licenses. Let's say you're into a service which has to get copyrights, patent, then you have to invest. You really have to invest for it. Then any hardware, software that's required, your rental, purchase of furniture, let's say on rent, you're taking it. Any setup, telephone, transport, everything, each and everything comes under your expenditure, including taxation should be determined. You're in a country where tax is involved, please consider provision for tax in your budget as well. So this is a very simple, sample of expenditure budget. Now, when your expenditure budget comes, should we prepare for a year? Should we prepare for a month? Should we prepare for a day? Now, it depends on your organization, how minute you want to monitor. As a suggestion, it's better you go for monthly, quarterly, and yearly budgets, because you will be able to anticipate this month's performance. How was your performance over 4 years? And then how was your performance over 1 whole year? Why? Suppose if there is a falter, there is a wrong decision being taken this month, you will be able to correct it in the end of this month when you know that the budgets have crossed the actuals. What you have provided for has crossed the actual figure. You will be able to determine by the end of this month. And you will not be doing the same mistake next month or 3 months later. That is why monthly budget is essential. Certain things you will be able to view only in a 3-month quarter period. And certain things you can see it on the whole. Day-wise budget, it's up to you. It's more a tedious task to be done. But if you want to maintain, you can absolutely go for it. There is some concept known as expense tracking. You prepare a budget. This is something that is prepared using Excel. This is a very basic Excel template. Okay, you needn't get into any software for this. It's a very basic Excel template where, apart from preparing the budget, where you're recording the actual, and budget and the difference, this helps to find out how much of budget you are spent and how much is it remaining at every transactional level. This is a transactional level expense tracking. So where you have your budget for each of the category. So for example, category 1 is my rent, category 2 is my telephone, category 3 is my cost of production, so on and so forth. I have my budget on top. I know how much I'm going to spend or how much I have spent and how much is it remaining. That helps to track your expenses. Now these, you will probably do it on 31st or 30th of the month. End of the month, you will be doing it. And then you will find the difference. But this expense tracking helps you to track your budget performance, your company performance at every transactional level. You know your revenue, you know your cost. Revenue is very clear, cost is very clear. Now, I told you as a startup, anticipating registration cost, business setup, office assets, then marketing cost. All this is essential to understand. Okay, and at that point, we don't have revenue, right? There is nothing, not a single penny of revenue that we have generated because it starts, startup starts with cost. We started like that. I had to buy computers, I had to buy the Zoom, I had to buy everything for an online teaching platform. And for my, data entry based company, the technology based company that we have just started, we had to invest in different projects, into different assets we had to buy, like computers for our interns to work on, pay them salary without a single penny of revenue generated on the day one. Cost was massive, and that was like 100% loss. The month end budget when we prepared, it's 100% loss because we were still establishing and our revenue model had not picked up, and we were still in the marketing, which we still are. So at that time, who funds you? Because you need money, revenue is not happening, from where you get your funds. This is where it comes. First, suppose you don't have anyone, you are the only person doing it, you will always go for a self-financed. You would have earned over the years, you would have saved something, or your family is supporting you, you will get into a self or a family-based financing. Second, okay, there are a group of individuals who are ready to give you money to invest in your business, crowdfunding. You get into a proper investor, giving them, the seed round, having them understand your company at different stages of your startup. Then you get into angel investors and venture capital. Last is traditional funding. Traditional funding is nothing but going for IPO, launching, issuing debentures, etc., or going for a bank loan. Now, at what stage, which one should I go for? Can I get into IPO on the day one? Please don't, because no one knows who's your company. You have just started. At that time, I can't post it in the stock market and give fresh issue of shares when no one knows what is my company doing and what am I doing, what are we doing within the company. This chart is very important. At what stage is your company in? You would have started from ground zero, where you're at ideation stage. At ideation stage, it's always, or 90% you are at family financed, or little bit of crowdfunding can come. That too from the trustworthy person. Once you start developing your prototype, that is, you're at your beta testing. When I said beta testing phase, that's your product is ready to an extent, and now you want to test if it is functioning well in the market. So at that prototype stage, you can get into angel investors, and then when you're going to launch it, you can get into a venture capital. But please note, angel investors and venture capitalists, most of them will monitor your stage of growth from the day they come in contact with your company to invest, because they will want to monitor for all, how are you performing today? How has it grown? Have you come out with new innovations to it? Version 1, version 1.2, version 1.3, and how is it being received in the market? Have you contacted some sellers? Because initially you would probably go to the seller, meet them, and then make them buy it. If it's a software or a hardcore product, or even if it is a service, you will try to establish some rapport with the potential sellers and then start with them, and then eventually take it forward. And very often, even angel investors and venture capitalists, they will also be part of your decision making. They will carry a huge stake when it comes to your company. After that, once you have established your product in the market, and then it's doing very well, everyone knows what your product is, what are you doing in the market, then get into bank funding if at all is required, IPO, anything, debentures, whatever it is. And by that time, eventually you would have also understood what are the costs that are going to happen, and you will be in a very not mature stage of the company, but your growth is there. It's after going through a steep growth, now you're at a static growth level. At a constant 1% per year, you're growing. That stage you can get into traditional funding. So let me just get into types of budget. Some you've already seen, That is, you've already seen the revenue budget, you've seen a expense budget. But the others is very precise. Now, what is the difference between sales and revenue? Revenue or income budget talks about both operating and non-operating income. But sales budget will just be what is from your sale of goods. From there, what did you receive? What was your actuals and what was your budgeted projections? Same comes expense and production. So all cost directly related to the cost of production, that comes under the production budget, while both direct and indirect expenses come under expense budget. The other kind of budget, you have your marketing, a functional based budgeting. For every function of your company, when you prepare a budget, it's going to come under a separate budget in its category. This branch of type of budget too is very specific to your project, department, branch based budgeting, segment. There is this in Companies Act that you have to provide segmented financial reports for each of your segments of operation. So that time companies get into a segment based budgeting as well, because that helps them to understand which segment is performing at what level. For example, a company which is, let's say, XYZ company, they are involved into manufacture of cars. They are involved into manufacture of bikes, and they're also managing hotels. So they're having three industries: car, bike, and hotel. So they will look into each of the budgeting separately. Yes, there will be an overall budget, but they will look at each of the segment-based budgeting as well. And every segment, they will get into a department-based budgeting. And under the department or under that particular segment, they can get into even a project-based budgeting. For example, if they've launched a new car in this, this year, next 5 years, they'll be involved into budget of that particular car. How much was it involved in the cost? How much of revenue was it generating? How much are we doing in the marketing? So that can go for that project-based budgeting also. So it can go, and you can have multiple budget. Should I have to prepare only one type of budget? No. Go for budget that is involved in your company. It can be 8 out of 10. It can be 5 out of 10. It depends on what kind of company you have and what is the industry you're operating in. But please note, try to go for budget for at least functional level, which is over here in the previous slide, this one. It's advisable to have at least, if not capital, leave capital budget, but rest of it, try to do it, because that helps you to understand because see, why do I need revenue and a sales budget? In that difference, you will be able to understand, am I relying more on my sales or am I relying on other incomes? Now, as a real estate company, I can rely on rental income, but as a training center, I can't, pay my cost using my rental income, because that's not a long-lasting thing. I need to use my sales, which is going to be my teaching, revenue out of my teaching, not on the rental income. So that is why you need to have both sales and revenue. Okay, now we know the budget, we know the terms, we know what is budget, who is involved, who are the stakeholders, why do I need to prepare, everything is sorted. How to start? First, make a list of what are your programs, activities, projects, everything that you're going to anticipate. Make a list of it. Under each of your project program, what are the key things that has to be done? Then break it. See, what is the difference between 1, 2, and 3? You start from the project name, and then you get into the granular level, into every unit by unit, level by level activities. Once you know your activity program projects, that's clear. Now prepare the cost. Identify what are the costs that would be involved. For example, let us take an example. Let's not have it theoretical. Let us take an example, and I'm going to give it from my startup example. So it's a practical one. I have taken a data entry project. Okay. And from the data entry project, I'm breaking it down into 2 data entry. We have a data entry using software and a normal data entry using Excel. Broken down into activities. Now I have to identify the cost. Cost for it, I need staff, I need my interns. I have to pay them salary. I need computers. For each of the staff, I need computers. And suppose if I'm working on a work from home model, then I need to give them the access. Means I need to use a software. So the software cost is involved. Suppose if I'm going for a physical establishment, then office space, rent, everything, furniture, incorporation expenses have to be considered. Then how much do I have to pay any rent? At a work from home, if I'm going to operate from my house, again, it depends. You can actually have your rent separate. That is, suppose if I have one particular room in my house, which I'm going to use exclusively for office purpose, then that room rent, I can charge it under my office cost. I will not include it under my personal rent. It is going to be my office rent, but that is a professionalism. See, if I'm going to operate it from my own house, I can as well consider it as a personal rent. But to show your business projections in place, you should actually be treating that office space as an office space and not as a personal space. Once the costs are clear, then go for the income. Why are we going in this manner? Why didn't we start with income and then go to cost? Why is it cost, then income? Because once we see the income, what happens psychologically? This is a very psychological thing. Once we do it, psychologically, the income number is there behind our head. And when we are estimating the cost, that is still there. Oh, so 100 rupees was my, 100 crores was my income. I'm spending 20 crore, 30 crore, 40 crore. I am visualizing my piggy bank getting reduced. Then what is happening? I will somewhere stop judicially anticipating the cost. I will become a biased determination. My entire projection is going to be completely biased because I know my anticipated income. That is the reason we start with cost. Because when you're anticipating the cost, you'll put everything in the books. Chalo, now let's see the income. Okay, this is my income. Quantify it. Then see the difference. Then see how much of contingency you can provide for. Suppose you feel that contingency matlab it's very simple, unanticipated, like, suddenly something happens. You do not know. That's what you provide for. And in a very, usual company setup, all this insurance, everything is a, contingency only, depreciation, all these are provisions and contingencies. So in this way, you prepare your budget. You start with your cost, determine it, quantify it. Determine your income, quantify it. Find the difference, provide some for contingency, provide for savings. Have something for savings and have something for reinvestment also. This way you can have your budget. Then use your expense tracking, use your different types of budget to see what is your actuals. Monthly, quarterly, and annually, visit, see how your company is performing. Now let's quickly see a small budget sample. I'll share this Excel sheet in the chat with all of you, and if possible, I'll see if I can share the drive link to Pradeep sir in case if you're posting it on YouTube and everyone wants it. But let me tell you, this is something that I picked online, not I have prepared it. For my company, I've fine-tuned it in a different manner. But this is a template that is easily available on internet, and I'll give you 2-3 websites where you can get into getting your budget templates as well. So it starts from here as a holistic budget, where you can see that there are different heads of expenses and different heads of income, and then they're getting into funding based budget over here. This is detailed expense budget, this part. And then over here you have the project based costs. Is this the only template? No, it depends on you, how you want to prepare, for what you want to prepare. Okay, and this is a very simple example of maintaining it in Excel sheet. You don't need fancy softwares, because I know at startup stage you have other costs which it is unavoidable. So these are some places where you can cut on, which you can self monitor it using less cost based softwares. then you should probably go for it. So that's what your budgeting also helps you in. Suppose you have the provision, you have the fund, then go for a fancy software, because in the long run, somewhere it is required. You wouldn't want it to be Excel based. But at the startup stage, you can get into something like this. So with this, we come to the end of financing and budget. We have seen what is budget. We started with that. Let me just revise quickly. We started with what is budget. We saw what is asset, what is liability. I didn't want to get into P&L and balance sheet, because somewhere that comes as an accounting concept. Accounting and finance comes in line. It does come in sync. It's good to know accounting, but that's a completely, at length domain, which I don't want to get into now. But understanding accounting is also good. If you're able to at least get into concept like ratios, balance sheet, P&L and ratio analysis, it will be an amazing, because you will know how much of profit are you generating from your sales, how much of profit, a profit percentage based on whole revenue, whole income, and how much of profit in relation to your assets, profit in relation to your liabilities, how much of debentures, what is the interest that others are getting, everything. Ratios like assessing the financial health of the company. So that's another way. So we started with what is budget, different terms in budget, who is it prepared for, why is it prepared, different types of budget, and at length we saw the revenue and expense budget, because it's very trivial to understand. And then daily, monthly, and yearly budget, and then steps to create a budget. And last thing we saw is sample. Now, before I hand it over to Pradeep sir, I would also like to tell everyone that when you're going to prepare a budget, it's very essential to understand the risks of a company. So risk analysis is also another thing which, you needn't get into concepts like financial risk management exams or nothing like that is required. All that you need to know is what are the different risks your company can face. Because at one stage, when you're getting to present it to your investors, your angel investors, they will ask. They will evaluate and come. They will finish their homework and come, and then they will ask you, do you evaluate? Suppose if you're going to do a software launch, you will be having technological risk, political risk, financial risk. There are many things like this. So that's essential to understand what each of the terms are. What are the different risks that you can face? Now, as a teacher, what are the risks you can face? Actually limited, but it's quite there that, okay, let's take the COVID example. For all those who were very particular on a face-to-face learning platform, what was the risk? This was unanticipated calamity or pandemic that has come into. It was not a technological risk. Although, yes, indirectly now we can classify it as a technological risk, because no one made them flexible that they could come into a online mode of teaching as well. But this COVID was a different risk altogether, and no one had anticipated what kind of impact it will have on our product and our services. So what happened? Many of the schools, they faced a hit because the teachers were yet to get equipped in delivering through an online platform. And then getting into different, platforms like WebEx, Zoom, Google Meet, which is good, which is hazardous, and then started the technological risk. I remember, in my sister's class, many of people, they used to come hack the code and they used to come inside the class, and then the whole teaching gets affected. So those are the technological risks which even industry like teaching faces now. So anticipating risk is very important, because to help that, see, for example, for a data entry company, I need to have my systems with a good firewall protection so that the data is not getting lost, or antivirus and all of that protection is required. I need to invest for it. I cannot just anticipate and keep. I need to invest. I need to get firewall protection, whether or not I have the revenue. So what happens? Person comes back with the same thing. Today I don't have revenue, but I need to generate funds. Then I need to see different types of fund. At what stage am I in? Who will help me to give funds? Then you get into the different concepts of budgeting from there. So with this thought of anticipating cost, how to do the budget, and helping you to explore more into this domain, I take leave. And thank you so much, everyone, for patiently listening. And once again, I thank Pradeep sir, Aamnaa ma'am, Arpita ma'am, and the whole team of Atmanirbhar for giving me this opportunity. Over to you, Pradeep sir.
Thanks. Thank you, Akshaya. I will not speak first. I will ask one of the eminent person here who is present among us on the board. Jamna madam is there, I can see on the board. If she can unmute or if she can switch on her video and actually she is the best person to judge how the presentation was followed today. And then I will speak. Jamna madam, please.
Thank you, Pradeep ji. It was really very enlightening. The whole thing was explained very elaborately. And I think ma'am has covered every aspect. So I don't think she has left any doubt to understand. But still, since it is a platform of incubators, so I think people may have little doubt to understand, because unless you go through all these things, you won't understand it properly. For beginners, there may be some doubt, but otherwise it is very much clear. And I got to learn many few things I used to leave, and it was all covered very well by her.
Thank you, ma'am. Thank you so much. I am so honored to hear this from you. Thank you.
No, really, it was wonderful.
So what we are trying during this incubation is, because our youngsters or learners are very much new to this field, especially on the business board. So we are trying a very basic structure, how we can go ahead for budgeting or for cost, for preparation of the cost, for preparation of the income and all those things. Because sooner or later they need to learn on this. If at all they are not into this, they will face the problem and there are the consequences. Business get hurt actually by that. So that is why we actually are trying to do this. And thanks Akshaya, the way you mentioned.
Yes, a little bit I would like to, sorry to interrupt.
Please.
Yes, in general common person also, every year we hear that our finance minister declares budget. So everyone knows to run anything, to run country also, our ministers, all country heads are preparing budgets. So that way every even household house head, what family head has to prepare, corporate had to prepare, business had to prepare, because you have to anticipate in advance what I am going to, what will be my expenses and what I am going to earn. So this is all covered in, and very beautifully she has covered dot to dot.
Thanks.
Thank you.
Only thing, I was very happy to see on the board that how Akshaya was actually informing all that there will be a difference. Of course, once you prepare a budget, the actual budget will be there, the expense will be there, and then the variance will be there. By that, actually, you will come to know why it is required. This particular budget estimation or budget preparation is required. That particular segment actually tells to all our learners that why it is required. Not least, for two more pointers on this. Whenever we go for the costing, I specifically when we go for venture funding or when we go for angel investors, all learners, those who are actually here and those who will be working towards the startups, once you prepare a costing on that, do prepare the costing for the interest of that particular venture funding. Do prepare cost for managing that particular fund, because you need to manage for 3 or 5 years for that, which is coming through venture funding. And do prepare the costing of how you actually get that particular fund. Because if you are not preparing under these subheads, this costing, then the realistic budget will not be there with you. Always try to be a realistic once you prepare the budget. Do think for whatever you are actually going to purchase for equipment or for the assets that will come under that capital cost. Of course, inflation will be there, salary incremental will be there each and every year. So this you need to think for whenever you try to prepare for that. And thanks Akshaya again. And thank you for these websites where you can actually, all the learners can log in and go through that preparation of the budget. And of course, the costing sheets too. Thanks to all learners here. Over to Aamnaa ji.
Thank you, Pradeep ji. Akshaya, very well explained. And it was really wonderful to see how you explained B2B. That's how I'll, coin the session. The benefits of budgeting, right? So, as we all know, the whole idea is to manage the money effectively, to monitor it really well so that you're able to meet the objectives by the end, identifying the problems, as you spoke about the inflow, the outflow, and things like that. Planning well does help. And considering that we still have more to learn and always more to learn, um, keep planning, do the right budgeting, and keep learning and keep growing. Thank you so much to all our collaborators, all our implementing partners, Aamnaa Learning Platform for doing the kind of work they're doing, trying a team of corporate professionals. Thank you, Akshay, for such a wonderful thing. And the best thing I'd like to mention on a personal note is that the way you said this honestly, that it's available online, you know, it's there online. Many, I've attended so many. It's been 20 years. I've rarely met people who have the courage to say, you know what, this is picked up online. This is not my material. So I really, really acknowledge and appreciate that. And kudos to you. Keep empowering and keep growing. Thank you so much from all of us here. And see you until next time.
Thank you so much.
Thank you to all, and I would like to quickly thank you all my partners, all my learning students. A special thanks to Aamnaa Singh University, because most of the students and learners are from Aamnaa Singh University. And thanks to Aamnaa, thanks to Akshaya for being a guest speaker. Thank you, Aamnaa, for moderating and for supporting us. And she is also now a partner member of our A&B team. Thanks to all the organizations. Thanks to Prakarnika, thanks to our Impact and Inclusive, thanks to Hasna Foundation, thanks to SAR Digital, and thanks to Mindcube for being with us, supporting with us for all of the initiatives. And thanks to all other collaborators like SAR Digital. And of course, thanks to my team and my IT team, those who are supporting on each of the day, either during this incubation program or of course taking forward for other initiatives too. Thanks to all. Jai Hind. Thank you. Namaste.